Alright everyone, welcome back to the channel for another Bitcoin update. In today's episode, Bitcoin primed for a July capitulation. We're going to be talking about a range of different macro BTC charts. We're going to be looking at how Bitcoin is performing on the Heikanashis, talking about the general trend in the stock market, the dollar, the greater markets, and also how Bitcoin is performing against other asset classes. So with that being said, let's jump right in the video. This is a 2 of 2 in terms of the Bitcoin videos I'm going to be uploading today. By the time I upload this, there is going to be a short-term Bitcoin video where I talk about what to expect in the next week. This is the more in-depth perspective. So let's jump into this. So the first thing I want to talk about is keeping it plain and simple. We can remove all the drawings. One of the most important levels that Bitcoin has historically always reacted with is this 200-week moving average. And on the weekly time frame, you can see the previous week we dumped almost down to the 200-week. We had a relief rally, and at this moment in time we are staring down the barrel of death, getting primed for that next level back to the downside, because we're really not getting the momentum back to the upside that we currently need. This is what I extensively talked about in my video that I will be uploading, or I will have uploaded prior to this Bitcoin video. So right off the back, 22,500 is probably going to be a massive level of resistance for Bitcoin. And you can see, back here in the 2020 capitulation, the pandemic scare, this is where we had a major capitulation down in the 2018 bear market lows. This was also where we found our bottom. So we know, based on previous trends, based on previous data, that we have always historically reacted very well with the 200-week, and when we do capitulate beneath it, we often get that next leg to the downside to the 300-week. We even held it very well on most of the weekly time frame in the 2015 bear market. So right off the bat, one of my first price targets is for us to come down to this 200-week moving average before we do have a big run back to the upside. So this would be meaning Bitcoin's probably going to wipe out about another 22% of its price. We previously bottomed at around about 17,640. On the daily time frame, I think something like another expanded flat correction would be absolutely beautiful, where we trend sideways, start to capitulate into the next month, have our expanded flat bottom, and then we start having a relief rally after we've had an expanded flat bottom from the 17,500 drop. So first chart right off the bat, 22,500, major area of resistance, and we're probably going to find ourselves around about the 16,700 to 17,000 range on the 300-week moving average coming into the next month. If we look at the Bitcoin market structure on the Heikan-Ashi candles, because if you don't know why we use Heikan-Ashi candles, these are a great way to characterize whether you're in a uptrend or a downtrend. And you can look at this. Over on the Heikan-Ashi candles, you can see these beautiful seas of green, followed by seas of red, followed by seas of green, seas of red, seas of green, and seas of red. So with this particular chart, what you will actually notice is this smoothens out the data a lot, and instead of having that 10-week capitulation with a bounce, we've actually sitting, I believe this is the 12th week, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's actually 11 weeks to the downside that we have currently been residing in. Let me just double check that. 11 weeks, coming up for 77 days that we've been in this mass capitulation over for Bitcoin. So a great reason, a great explanation of why we use these as well is if we switch over to the Japanese candlesticks, you can see a lot of the times you have these fake outs, but you smoothen out the data and these fake outs are not even here. So one of the major indicators I'll be looking at to help me guide myself through the market, letting myself know, when is this downtrend going to start subsiding, is when I finally start to see the weekly Heikan-Ashi candles start to switch back to the upside. Because in previous bear markets, you can really tell, if you started buying the dip once after the final capitulation, you would have started buying round about 3,750. And we bottomed down here at 3,200. I would have loved to buy almost the exact bottom down there at that exact price back in 2018. I was somewhat more of a noob and I was buying the dip down to the downside and I got wrecked. And in this cycle, if you are a seasoned veteran to my channel, you know that I've been sitting on the sidelines for a very long period of time, and I am currently getting these price targets that I'm DCAing in now. Unlike the people who've been DCAing this, you know, all the way down, we've been getting very, very nice price targets at these levels. I still do think one final capitulation is in play, as we are currently flirting with its previous all-time high. Now, if you want to learn more about Heiken-Ashi candles, be sure to head over to my channel, click on playlists, and head over to the educational series. If I find it for you, if we scroll down, you have this video here, how to Heiken-Ashi candles, and I will explain everything you need to know about Heiken-Ashi. So on my channel as well, I do provide technical analysis, but one of the major goalposts of my channel is to provide free educational content for everyone who watches. So that being said, you can see we've got 21 educational videos, all completely for free, covering a range of topics from the basics, like what is a security, what is a coin versus a token, what's the market cap, what's the fully diluted market cap, all the way down to things like Elliott wave theory, which are definitely more complex than, you know, looking at what is the difference between a coin versus a token. So if we head back to the general market structure outside of Bitcoin, because looking at how the stock market's doing, looking at how the dollar is doing, is going to give us a very good indication of what can we currently expect in Bitcoin. Because, you know, if we look back at these previous cycles, the dollar, you know, or rather, sorry, the SPY had the exact same capitulation that Bitcoin did in March of 2020. And once the stock market started waking up, it started leading the rally into Bitcoin, and Bitcoin subsequently was beginning to move back up to the upside. So the stock market and Bitcoin are very, very correlated. They've been slightly dehinging from themselves. They've been, you know, moving away from each other in the past couple of days or so. But moreover, the macro timeframes, these play out to the exact T. For example, if we switch over to the Japanese candlesticks, I've had a few people say, you know, why is the stock market heavily decoupling from Bitcoin? But as far as I can tell, you know, we had a bounce on the 23rd of May and we're having a bounce on this week, and Bitcoin had a bounce on the 30th of May. So this shows that the stock market bounced before Bitcoin. Bitcoin reacted and bounced after, and at this moment in time, the stock market is also having a very healthy bounce on the weekly, and this is exactly what we're seeing over in Bitcoin's chart. So the stock market is a leading indicator of what to expect on the Bitcoin chart, whether we like it or not. So if we switch back over to the Heiken-Ashis, we will be able to, you know, distinguish and take away from a lot of these dead cat bounces to lower highs that we have been having in the market structure. And when we do this, you can very much see smoothing out the data, even more smooth if we head over to the monthly. You just really don't have fake outs over on the monthly time frame for the stock market. Now, what I would like to say is if we do remove all of the drawings, when we do enter these mass capitulations, we pretty much always come down to the 200 week. You can see capitulation 200 week, capitulation 200 week, capitulation 300 week, capitulation 200 week below the 300 as well, which was very, very brutal. Here as well, you capitulated below both the 200 and 300. Here, you capitulated to the 300. So all of the time, almost, yeah, basically all of the time, you know, all the way back from the 200 and 300 week inception of the stock market back into its first major dumps into the year 2000, we always come back down to these moving averages time over time over time again in the last recession that we had, because in my opinion, we're not in a confirmed recession yet. I think we're getting ready to be in a confirmed recession. When we did have that back-to-back negative GDP growth, which obviously is indicative that you are in a recession, this was what happened in 2008. You had a massive, massive landslide below the 300 weeks. So right off the back on the stock market, if we bring up our previous trends, it is very, very conservative to say that we would at least be coming down to the 200-week moving average. So if I draw out some of these lines, if we switch back over to the Japanese candlesticks, so I can give you an exact price target, let's head over to the weekly. This would still mean that the stock market would be very, very likely to flush out a further 10%. And, you know, let's look at what the stock market's been doing from its all-time high. The stock market is down 24%, while I believe Bitcoin is sitting at a minus 75%, which just shows you if the stock market comes down another 10%, I'm not saying Bitcoin is going to come down like, you know, 40-50%, but it is probably going to come down to between 16,500 to 14,000. I'll talk about both of those targets again in just one moment's time, but I think a more not conservative, but a more realistic approach to what we're likely to see in the stock market is a move back down to the 300-week, which would be an 18.5% drop for the SPY, meaning that we'd probably be getting ready for a big flush out on Bitcoin, which could lead us down to maybe even these previous highs that we had in the one wave of the Elliott wave theory on 14,000. And we'll wrap up the video talking about some of those less important charts. Moving over to the dollar, just like we're doing on the stock market, we're moving over to the Heikonashis to get a very clear indication of what is going on with the trend right now. If we remove the Fibonacci right off the bat, if we hide these moving averages, you will notice that we are forming, or we have formed, a beautiful cup and handle pattern on the dollar that's been panning out since March of 2020. This has been playing out since the pandemic, so this is a huge pattern on the dollar. You know, we formed this massive cup, we formed this massive handle. It's very clear if we head over to the daily time frame, switch back over to the Japanese candlesticks. I think I had this drawn on the weekly time frame, which is why it's a bit far-fetched over on the daily. But you can see this is what we've got playing out. We formed a perfect cup, we formed a perfect handle, and we're now seeing a perfect breakout on the DXY, the US dollar index, which is not surprising whatsoever. So right off the bat, drawing our Fibonacci from the previous local high up here in the pandemic scare all the way down to the lows on the dollar, I do think, let's head over to the Japanese candlestick so we can get the approximate value rather than the estimated value from the from the Heikonashis, because you can see Japanese candlesticks, we get the exact measurement or the approximate measurement, and then you switch back over to the Heikonashis, and these are slightly different because they open approximately halfway through the previous candle body. So with that being said, the dollar could still take another 7% move back to the upside. And when was the last time we witnessed, you know, a 7% move like this? Well, this 7% move has been panning out since the 7th of March 2020. So if we go back to what Bitcoin's been doing since March of 2020, we were right here, 38,000. We're now down at 20,000. So if we do continue with another 7% move, just like we've been seeing panning out on the dollar, and bear in mind, this is a huge macro indicator. I really think 111 would probably end up being the top for the US dollar. You know, the levels that we're at right now, we haven't been at these levels since 2002. So, you know, that should definitely show you that the dollar is in extreme strength right now. If we do come up to 111, this would still be lining up with a lower low for the dollar, which would definitely, you know, say something about the market structure, because the market structure of the dollar in the higher time frames is in a massive downtrend. And when I say higher time frames, I mean, you know, in time frames probably longer than most people have been alive that are watching this channel, you know, time frames that are spanning, you know, 22 25 years or so. But with that being said, the dollar looks like it's going to head up to 111. This would probably wipe the floor with Bitcoin, and subsequently, if the dollar is going to move this high, I do think that my price prediction of 16,500 for Bitcoin to come down to would be too conservative, because what we are witnessing right now is well, it's not confirmed at this moment in time. We haven't had the next GDP report, but if we do have two back-to-back negative GDP reports, we've already had one, then we are going to be in a confirmed recession. The last confirmed recession we had was in 2008. Bitcoin started trading round about 2009 to 2010, even though it doesn't show in this chart. So Bitcoin has never witnessed a bear market slash recession that we are in right now. We've witnessed bear markets, sure. We've had one in 2015, one in 2018, and yeah, I don't really think that you can argue that 2013 or 2011 was a bear market. Nonetheless, we've witnessed many bear markets. We have not witnessed a recession. And in previous pandemic scares slash bear markets, we typically come down to the 200 to the 300 weeks. So with that being said, if we are in a recession, it should probably push us down to the next leg down. I'm going to finish off on how Bitcoin is performing against tech stocks, you know, on an index scale like the NASDAQ, but a couple of other price targets that we can look at in the short term is the next CME gap on the Bitcoin CME futures for the Chicago Mercantile Exchange. The last CME gap we had, if we zoom all the way back to December of 2020, we had a very nice gap, at 18,470. I've got this down as 18,500, so obviously I'm just generalizing the price, but nonetheless, I definitely think this is where Bitcoin is very, very likely to head down to next. So also monthly time frame, very evident that we are getting absolutely battered right now. Heikonashi's, you know, this called the top at the 1st of December, around about $55,000 for BTC. So the most conservative price target that you could have panning out in the next month, in the next couple of weeks, would be 18,500. If you do drop below 18,500, 16,500 to 17,000 is where the 300-week moving average resides. And also, if we look at the Elliott wave theory, I will show you the macro Elliott wave theory before I show you the micro. You know, these are basically the same, but we're just going to be counting the individual waves between them. If we look at your typical Elliott wave theory, put this in a logarithmic growth curve scale. Let's see. So, you know, this was your bottom. Obviously, you had your previous 1, 2, 3, 4, 5 all the way in this bull market, and then you had a very typical this was actually the B here, A, B, C correction into another 5-wave impulse, meaning you've got your 1 wave, 2 wave, 3 wave, 4 wave, 5 wave, and now we're obviously witnessing another A, B, C correction, just like we have in every bear market on every Elliott wave theory. If you don't know what I'm talking about, if you don't understand Elliott wave theory, once again, hyping up the educational playlist. This is why I've got this educational series to help people who are new to trading and don't understand these. I have made a video, how to Elliott wave theory. Everything you need to know, everything you could possibly want to know is in that video. So with that being said, higher time frames for Elliott wave theory to remain valid, which so far it has in every cycle previously. I don't have it drawn out. I do have it drawn out on, oh no, I have it drawn out on a different chart. Not important though, we won't look at previous cycles. I looked at previous cycles in this video, or not this one down here, how to Elliott wave theory. But that being said, if Elliott wave theory does hold true, we will bottom above the 1 wave at 14,200, which is why approximately 14,000 is my most bearish price target for Bitcoin. With that being said, if we look at the lower time frames, since we had our ABC correction, we're bound to witness 2 bearish impulses. These impulses are your let's see, yeah, I thought this looked this looks wrong. So let's draw this back up, because I don't know what this is. So we have your 1, 2, 3, 4, 5, and then you come into your A, B, C correction. We would currently be residing within that next 1, 2, 3, 4, and subsequently I still do believe that we are in the 5 wave. Now you can draw this a few different ways. You can even argue potentially, I don't think you could, no, you definitely couldn't draw it from there. So you could argue 1, 2, 3, 4. I definitely wouldn't call this the, you know, the ABC out of here. So subsequently, I do believe that we are in our final capitulation back down to the downside. If we switch back over to the macro charts, we should be expecting that in the lower time frames on the daily, in this last wave, something like this is playing out, where you've got your 1, 2, 3, 4, 5, and subsequently higher time frames. This would be calling for the bottom at 14,000. So that is basically all I've got, apart from I want to talk about how Bitcoin has performed against the Nasdaq. Why do we look at the Nasdaq instead of something like the SPY? Well, because the Nasdaq is an index bucket of other tech stocks, which Bitcoin is very highly correlated to. Now, when Bitcoin enters these bear markets, this looks exactly like BTC against the USD. And that's because, quite simply, put Bitcoin on a logarithmic growth curve scale, and it's obviously exponentially growing to the upside. So with that being said, it really doesn't matter most of the time whether you compare Bitcoin to, you know, apart from Tesla, because Tesla went on a massive bull run, which is why this is looking so wonky. It doesn't matter whether you're comparing it to the stock market, SPY, you know, gold, silver, oil. These all pretty much look the exact same. But like I said, the tech stocks on the Nasdaq are the most highly correlated to Bitcoin, in my opinion. And when we previously have had these pandemic type scares, and bear in mind, you know, looking back at what happened in March in 2020, this is exactly when we started this macro cup and handle pattern on the dollar. This is basically when we started to get the origins of the recession that we are currently entering in right now. With that being said, if we do look at the previous time this recession was basically starting, we were at the 300-week moving average, which would mean if Bitcoin is going to capitulate further into the confirmed recession that I believe we're going to have, Bitcoin should subsequently drop about another 17% against tech stocks, which sounds pretty bullish, right? You know, that you might think that meaning, you know, that Bitcoin's only got 17% more to go, but this is based on the assumption that the Nasdaq would also be dropping down to its 300 week, which it has done in previous bear cycles, which would mean a 25% drop for the Nasdaq. If Bitcoin's going to underperform that by 15%, that should mean a 40% drop over on Bitcoin. It has done this before. Why am I talking about the Nasdaq? Because the Nasdaq previously capitulated below the 300-week moving average in the last recession we had in 2008. So that being said, there's a lot of indicators right now, a lot of higher time frames. You smooth things out, put them on higher time frames, look at the Heikonashis, and you can see the dollar is going up, the stock market is going down, the Nasdaq is going down, Bitcoin against the Nasdaq is going down, and the Nasdaq looks like it wants to outperform Bitcoin slightly, so Bitcoin can come down 40%. We look at Bitcoin on this chart, you can see it's currently flirting with its previous all-time high underneath the 200-week moving average. This is what we highlighted in this chart as well, which is why we think 17,000 is on the table in the short term. We talked about a CME gap at 18,500, how this is your next price target. In my opinion, we should expect this coming in the next month. We should expect the bear market lows to come into fruition in the next 2 months, I'd say. That would give us time for about, I believe, about another 2 to 3 months would be another 2 FOMC meetings. They're not every month. I believe the next one is about 30 days away, and I believe we've got another one. Yeah, we've definitely got another one before the end of the year. So with that being said, I don't know what this is going on over here, because yeah, this is not an ABC correction. So we're gonna get rid of these just like we did before. But these 1, 2, 3, 4, 5s that we're currently witnessing in the C wave is what is currently playing out. So the most bearish price target that we could possibly draw from on Bitcoin is 14,000. And as we're getting closer to that next GDP growth report, if we do get that confirmed recession, it is basically going to be the nail in the coffin saying that Bitcoin is going to come down to 14K. I like to take it one price target at a time. I think 16,500 is very, very conservative to estimate that Bitcoin is going to bottom at. And with that being said, from where we are at this moment in time, I think another 22% drop is very, very likely. We talked about how if we look at how Bitcoin performs against the Nasdaq, this should mean that Bitcoin's going to come down 40%, which would mean a drop down to 12,800, which would actually put us just below the start of this one wave. This would actually put us at just above the candle body closes of the one wave, which could still mean the Elliott wave theory would be valid on the weekly time frame if we come down to 11,800 and bottom at around about a 45% drop. Like I said, I don't want to talk about that right now. At this moment in time, 18,500, I have no doubt in my mind that is going to get smashed out of the water, but the 300-week moving average down here at 16,700, probably coming into about 17,000 in the next couple of weeks. This is the next price target for Bitcoin. Nothing's changed. The stock market's still heading down. The dollar's still heading up. The Fed has not backpedaled. The Fed is still hawkish. We've got our next GDP growth report coming very, very soon. And if it is back-to-back negative GDP growth, we are going to be in a confirmed recession. The last time we had this, you saw the SPY, the stock market, tech stocks, everything have a massive, this was back here actually, the 2008 crash. We had a massive capitulation below all of these major moving averages. I'm not necessarily saying we have to play out to the teeth, but once again, I am saying that it would be conservative for Bitcoin to come down to the 300 week, which is, once again, 17,000. So all I've got for you today, as always, not financial advice. Cal way out. Peace.